Markets today ending in the green after 2 to 3 subsequent wash down sessions. It has been quite unpredictable in the past couple of days and weeks, Suyash. Come to think of it, the mid caps, small caps, and more importantly, PSUs that a lot of people have been banking on, especially retail investors, to be wealthy, make money. There was a huge profit booking in that space.
Certainly, Shweta, and to call the markets volatile currently would be an understatement, because we are seeing 0.5% movement on headliners pretty much on a daily basis. And let's talk about today's session first. Of course, there was a good pullback for the markets. Nifty, ended about 0.5% higher, and today's surge was driven by your private banking stocks as well as select heavyweight stocks like Reliance Industries, L&T, and Coal India, to name a few. Let's first look at the levels of today, because Nifty closed with gains of about 0.6%. It managed to close just shy of the 21,750 mark. Sensex also gained about 0.7% or so. And broader markets also, although they underperformed, they ended in the positive, and VIX has come down substantially. But I think the ball is still in the court of the bears. And let me take, I have three reasons for why I think the bears are going to dictate the momentum of the markets, at least for the next few sessions.
In the short run.
Yes. First, of course, as I mentioned earlier, it was the banking stocks that led today's charge, and if you look at all the upside that came from for Nifty today, 40% of that came from just 4 banking stocks: your ICICI Bank, HDFC Bank, Kotak Mahindra, and Axis Bank. And if you look at banks, they have been super choppy. In the last 4 sessions, we have seen 1 to 2% movement on Nifty Bank, and it makes you really wonder, because a good pullback, of course a 1% pullback we saw in Nifty Bank today, but that has been the case pretty much on a daily basis, right? And in fact, I think why I would suggest that the index is not out of the woods yet is because we saw a sharp 250 point fall from the intraday high. So definitely the banking stocks did well today, but bulls could not drive the market higher from there. And of course, since the banking pack or the whole is responsible for about 30 to 40% of the entire Nifty performance, that will dictate how the headliners perform going forward. Reason number 2 is that the broader markets, now cracks are starting to appear over there. Yesterday on Monday, we saw about a 3 to 4% correction in both mid cap and the small cap indices. Now, if you look back, at the last 6 months, pretty much on every month we have seen one day of a shakeout where both mid cap and the small cap indices have given up about 1% or so, 3 to 4% or so. But the recovery has been equally swift and immediate. I mean, in the next session, you would see a recovery of about 2%.
Bump up of 2 to 3%.
Exactly. Half of what we lost, we would recover. But this was not the case, this time around. And even though the broader markets, both indices ended near the day's high, the pullback wasn't as strong as we had been used to seeing in the past 6 months. And I mean, it's still really easy to say that will this sluggishness in the broader markets will sustain. Of course, we'll see how that pans out over the next few sessions. But moving on to the final reason is, of course, on the price charts. The technical indicators are suggesting that Nifty for one has been making lower bottoms in the last 4 or 5 sessions. Now this is a bearish indicator, and even the tops, the intraday highs are also sliding down in the past 4 out of 5 sessions. And I've been speaking to a lot of technical experts. According to them, Nifty needs to take out 21,850 for there to be a pivot, a bullish pivot. Right now we are at around 21,740, so just about 110 points shy to see that momentum shift from bearish to bullish.
All right, a bearish sort of outlook that we are projecting at the moment. I just have one more question for you. The fact that we've seen a rally today on the back of banking stocks, how likely is that rally continue to sustain in perhaps next 2 or 3 sessions from here on? And what other support can Nifty get? From what other sectors are we looking at a short-term support for bulls to perhaps reclaim the markets?
See, as far as the banking pack goes, it's a $1 million question out there, because we are seeing 1 to 2% movement both on the green and the red side on Nifty Bank.
Extremely
so there
volatile
is no clear-cut clarity what's next for banks. After the policy decision came out, the banks have turned especially choppy, and talking to experts, according to them, there is a clear-cut liquidity crunch in the market, and it's getting difficult for banks to land low-cost deposits. Of course, we are in a high interest rate regime, so that is perhaps going to wane on the earnings of the banks, and that's why the outlook right now, it's I mean, from a valuation perspective, the private banks do look rather cheap. PSU banks, the story is different over there. They have rallied from somewhere 40% to 400% in a matter of 12 months. So of course, not much to comment on that, and whether we'll see further correction.
Okay.
But the private banks, as far as valuations are concerned, definitely they are cheaper than they have looked in the past 15-20 months or so.
So perhaps an opportunity to buy there.
Definitely. Among other sectors, I think IT and pharma could be contrarian bets, because in the last few sessions where the markets have been really volatile, both indices have capped at least the losses on a daily basis. In fact, yesterday IT was the only sector that was ended in the red, in the green, and pharma too, it ended flattish. Even today they
so you never know, IT could be the outlier there.
Yes,
in a very volatile and a choppy market as we are looking at it at the moment, but both sensex Nifty ending in a positive terrain today.